In terms of, what we're going to look at, it's a little bit of looking at, the crystal ball. What does the future truly hold, and what do we need to do as business people within F&I and the broader space to be able to manage that? In terms of the overview, I'm sure all of you are up to speed with some of the figures, but worth, I think, reiterating. You can see that post-COVID, we had a little bit of a recovery, but in 2023, we've seemed to stagnate a little bit. Our year-on-year sales have declined over the past 5 consecutive months leading up to December. Passenger vehicles have decreased 4.4%, light commercial vehicles increased 11.6%, and medium commercials declined another 0.6%, with heavy commercials increasing at 12.8%. Overall, combined, it's a 0.5% increase, which is not as good as we want if you think about it, because the growth that you are seeing in population far outstrips that kind of growth over the year, which means we're not able to accommodate and absorb all of the demand that would remain. And that tells you something about how the demand is affected essentially by some of the macros that I'll talk about later. It's not all bad news though. The industry saw good exports. As you know, we have 7 manufacturing OEMs in the country across various regions, Gauteng, Eastern Cape, as well as KZN. They managed a 12.7% increase in their exports. We export 65% of the vehicles that we make across the globe to various places such as the EU as well as the US. So that bodes well for local manufacturing and exports. We also saw that pre-owned passenger vehicles of the used car market saw some good strength and good growth, even though there was a downward trend for new vehicles. The question we need to think about is, how do we meet our customers where they are? If they're demanding these pre-owned vehicles, how do we make sure as business people that we're able to accommodate that? In terms of the economy itself, it remains constrained. The economy has got potential, if you read some of the articles, to be 2% bigger than it is from a GDP growth perspective. We know some of the main drivers, the load shedding that we've had, even though in the past couple of weeks it's been a lot better. The general look and feel is, as they say in Game of Thrones, winter is coming, that we do have still, more demand than we have supply, and that's going to continue to pose challenges on the economy and its growth. The retail, network or rail network and ports have been inefficient. They're the artery of the economy, but they've been quite clogged, so to speak, and that causes constraint on how much various sectors, mining, agriculture, import, export sectors, including the auto sector, does cause problems for all of those various sectors. The Reserve Bank, as you've seen, has elected to keep interest rates as they are for quite some time. That puts a lot of pressure on consumers from a disposable income perspective, really struggling to manage to service their debt costs and therefore have disposable income to be able to buy, vehicles and so forth. In terms of the economy as sort of a part B, the wage increases that we're seeing generally by people were not as high as the inflation figures that we've seen over recent years. That puts a lot of pressure on disposable incomes. The rand strength has been a challenge as well. We've seen that some of our trading partners have a better currency than we do, which is good for exports, but very bad for imports. So we find ourselves struggling a little bit with when we want to import vehicles, import components for vehicles and accessories for vehicles. Those come at a slightly higher price, and that price is essentially pushed onto the consumer, making it quite a difficult environment. The rand struggling plus unstable crude oil prices has created a bit of fluctuation and instability in the fuel and diesel prices. That of course affects users and consumers at the pumps, whether business or consumers. And of course globally there's various conflicts that have been going on. We saw when the Ukraine-Russia conflict began how much of a challenge that was for semiconductors and all of the various elements that go with it that need to go into a modern vehicle. That has somewhat unabated with suppliers of semiconductors sort of finding their rhythm again, but we still do have some bottlenecks and challenges in the parts and the types of things that we need to be able to get from a global supply chain perspective that make it quite difficult for us to operate. So therefore I want to focus the majority of this conversation, the last 70 slides, no I'm joking, the last couple of slides or so on what does it mean for the future? What are some of the things we need to think about? I'll speak a little bit about the macros, the sort of that push and pull factors, and I'll speak a little bit about sort of the micros. What is the consumer saying? What do they need and what do they think? In terms of a 2024 perspective, thus far in the first quarter, we've had continued decline in new car sales growth. So that makes it not 5 months, but now 8 consecutive months of declining new car sales. Vehicle exports have seen a bit of a mixed bag in the performance there. So that also continues to be a bit of a challenge for us. We know that several OEMs are introducing new models from an export perspective, and hopefully that will sort of help improve the situation towards the latter part of the year. The likes of BMW, for example, launching their new X3. In terms of for the balance of 2024 and the years that go on, in the following slides I'll speak a little bit about that. The elections, that looming uncertainty around the elections that can't be avoided. As we know, in every election cycle, whether South Africa or anywhere else, policy questions start to be raised. So you might find that investors kind of hold back a little bit in making those fundamental and key investments that we need as a country. And that sort of bodes a bit of a challenge for us from an economic growth perspective and expansion perspective as they wait for that policy uncertainty to sort of open up. It's important for us and I encourage all of us to go out to vote. It's something that is hard earned as a country. We know our history, we know where we come from, and not every country has the benefit of having free and fair elections. So we have to exercise that right and exercise it with due care. Importantly, there are many permutations of what will happen in terms of the economy itself. If we think about the elections, will we have a majority or the ANC having a minority, but banding with other smaller parties to form a coalition that helps them to steer policy in a certain direction? Will we have the broken coalitions we've seen across various municipalities where we sort of start and stop various projects? And in this case, will we start and stop various policies? Will we see through the reforms that we desperately need from an infrastructure perspective through the likes of Eskom, Transnet, and so forth, or will we stall those? All these permutations make it quite a challenging environment. And of course, no one really knows what the elections will look like. What role do we have to play as the private sector? I think could we play a different role in the way that we position ourselves to support government and to lead them where possible through partnerships? Is there room for business to play a more pivotal role in not waiting for policy direction, but instead to help, to assist, to inform policy instead of just responding to policy as and when it's communicated by the various instruments of government? We're not immune also to global factors. The elephant in the room, we do know all about the various conflicts happening on a global level, global tensions rising and so forth, that we don't go unaffected. I think the Ukraine-Russia conflict showed us that we do get quite dramatically affected by global happenings, and that as a country we're not immune and have to find ways to be able to navigate that. As business leaders, as leaders within F&I think, and as South Africans, we've shown our resilience generally, and that's why South African leaders do so well on a global level when they work in other countries as well. In terms of infrastructure challenges, they persist, and I think they'll persist well into the future. If you look at our power grid, I think it's going to remain under quite severe pressure. Even though Eskom has tried to improve its energy availability factor over the recent months, it's nowhere near where it used to be 10 years ago, so it's still quite low. Speaking about bringing certain plants back online towards the latter part of the year, but that might not be enough. We know we have various independent power producers coming online, but there's a constraint, as we've seen, with the grid capacity to allow them to come online. We have to think about interesting and innovative solutions to be able to solve that. Perhaps at least if we can't do it at a macro level, at least at a micro level within our businesses, within our own business parks. How do we, for example, find ways to be able to generate power and alleviate the pain that we see across the country? Also, the issues at our ports, and it's not a short-term problem that's going to be fixed. We know that the likes of, first, the rail infrastructure network has been decimated, cables being stolen and so forth. Makes it very difficult to move goods in and out at the speed and frequency that we need, not only for South Africa, but also for SADC as a region to be able to move all of those various items to and from the various surrounding countries, and of course for import and export. The ports themselves, that picture shows you how clogged the ports were in Durban. Creates quite a big challenge as well. If you have various ships waiting to load or offload, and various containers and goods that need to go to and from various customers, it becomes quite a challenge. Even though significant work is being done, the private sector is getting involved. Those efficiency gains, I think, will take quite a bit of time for them to come to fruition. So we will continue to see that pain. We have to be careful that we don't find ourselves unintentionally creating, a market to compete with other surrounding countries on rather the airports being upgraded while we wait as South Africa to resolve our issues. The new one, of course, and maybe not so new, is water supply. The quality thereof, the security thereof, that's becoming increasingly a problem, especially if you're in Johannesburg. We know Cape Town had their own water shedding issues a few years back. And this is starting to ask the questions about all of the infrastructure that's been in place for all of these years. Are we looking after it? Are we taking care of it? And how do we make sure that we don't have these effects, the likes of Eskom, Transnet, and now with the water, that rippling through to other parts of the infrastructure and crippling the very economy that we need to survive and to build. So these challenges will persist. We have to think about ways as business to be able to, at a local level and at a macro level, to be able to sort of intervene and assist where we can. We can't sit and wait. This is our country, and we need to be able to make sure that we take care of it. In terms of, for the future, I'm a positive person. I think there's economic light at the end of the tunnel. You can see that the Reserve Bank, hopefully, towards the latter part of the year, various estimates, July, some saying October, so there's quite a wide range. This part of the year will begin to gradually ease interest rates, of course, in a responsible way based on the inflation target. And how do we see that playing out in the market as various, consumers, businesses, they have a bit more freedom to breathe and are able to sort of begin to purchase other things with the real disposable income, in our case particularly new and used vehicles. There's also, an appeal to government for the ease of doing business. I think we rank quite far behind the likes of Morocco, which we compete with from a auto sector perspective, at least from a manufacturing perspective. How do we make sure that we improve the ease of doing business? For example, in Morocco, they have a one-stop shop. You need to open a business cutting across all of the various departments, whereas for us, you have to go to various places to try to unlock and get that done. And lastly, that will help improve foreign direct investment, which is important. In recent times, an economist spoke about how the investment we've been doing over the past 2 or 3 years has not been expansionary. It's been more firefighting. I have load shedding, so let me invest in some backup power generation or primary power generation. I have water shedding, let me find a way to be able to run my business and my plant with some sort of water solution. So that's not expansionary, that's more firefighting. We have to have investment that's trying to expand the business, build a bigger plant, build a second plant, open another business and so forth. That's the kind of investment that we need. And once we sort of begin to arrest some of these infrastructure problems, then that capital investment can be better deployed to expansionary purposes. In terms of the consumer, that's quite important, especially from an F&I perspective. These slides and some of this data comes courtesy of Deloitte, even though, of course, we've put our own sort of spin and analysis on it. In terms of the sample size, it is a good sample size, I think, and surveys are surveys, but good demographic age group, good split between men and women, good split between urban and suburb and the rural places, so we can get a good feel and view of what consumers could be saying. Now, first start off with electric vehicles, right? Touched a little bit on the demand, the affordability thereof, as well as the ecosystem. As a start, we've seen a bit of softening demand for EVs from a local perspective. In recent times, there was quite a bit of hype about electric vehicles. People are going to purchase them. It's going to be, all this great hype. But as you can see from the graphs, more than 70% out of people are still keen on internal combustion engines, whether that's diesel or petrol. And that bodes, interesting for the EV market. Even though we've seen people bringing in various EVs, electric vehicles at good or affordable prices, you can still see that people, intentions are still to, at least for the next year or so, I'm still looking forward towards internal combustion engines and so forth. Obviously, there's quite a bit of pressure if the prices are high, inflation rates, all of that disposable income, economic uncertainty make people a bit hesitant to be able to sort of go towards electric vehicle. And I mean, the question we always get asked is, if I don't have power, how will I charge my vehicle? And these are some of the constraints we need to overcome. Other one is, of course, affordability. As you can see, whether people are buying on the graph, whether an ICE engine, internal combustion engine, or EV type of engine, the vast majority, regardless, are not willing to spend anything more than 250,000 Rand on those vehicles, which means how do we make sure that we have the right stock and the right kinds of vehicles to serve those customers. For sure, there'll be those premium customers, people who buy Porsches and buy them cash and so forth. Not you and I, but everyone else, or those who have access to do so. We have to figure out how we also position and play for them, good margins in that part, but also for everyone else, how do we make sure that we keep them interested and we help them to be able to access the kinds of EVs that we put on the market. If we want that mass adoption, for sure we start with the higher earning groups, but for sure it has to go down towards those that are expecting 750k or less. In terms of why people choose an EV, it's important to note, interestingly enough, people choose EVs because in their minds there's a perceived lower fuel cost, and that's quite important. EVs don't use, full EVs, battery electric vehicles, not the hybrids, don't use any form of fuel. Even those with hybrids generally have got a better fuel economy, provided the battery is working in unison with the engine. So how do we make sure that our salespeople are empowered and know, if you look at some of these factors, what to sell and how to position to the various customers, right? Imagine a scenario where they're able to show sort of the cost of ownership to a customer to say, well, if you buy this electric vehicle versus not, similar model over the next 5 years, this is what your cost will look like. Your upfront cost might be high, but your running costs could be significantly lower, and the total picture could perhaps, for example, be better for an electric vehicle. So quite important that we empower and enable our salespeople. I'm sure you clever colleagues at F&I will put some good models together that they can use to be able to persuade customers. Interestingly enough, fuel costs outranks, emissions concerns, environmental concerns. One of the other key ones is people are looking at, can I use this electric vehicle to power my house at night when I have load shedding, and vice versa. Imagine a scenario, I think all of us are to some extent back to work. Imagine a scenario where you're able to essentially charge your car at work, and then when you're back at home, if you have load shedding at night, are you able to use that battery in the car to be able to sort of power your home, depending, of course, on the size of the battery and the size of your home. In terms of charging and payment, this is quite interesting and I think important for F&I. When I say charging, I mean charging the electric vehicle itself. Very important, people are looking for fast charging. What does that mean? There's a choice between an AC charging and DC charging. There's quite a big difference in how long it takes to charge a vehicle. It's hours type difference. It's important that as consumers are looking to buy an electric vehicle, that this charging problem is solved. Mind you, the adapter for the charger is sort of going towards a standardized adapter, so that's not the main concern. But the concern is how long will it take. I don't have the luxury of waiting 8 to 10 hours for my vehicle to charge. If I'm charging at home, perhaps I do have the luxury of waiting. We've seen several dealerships and OEMs either sell you an electric vehicle. They also sell you the charging kit that goes with it. Install it at your house free of charge. Where I live, for example, at the clubhouse, you can charge your electric vehicle at no cost. So these are some of the things that become important. Personal security. We know that in South Africa, it's absolutely critical to feel safe as you're charging your vehicle, as well as, of course, the experience that people have. From a payment perspective, people are happy to use the normal cards and so forth. Some people pay with their smartwatches or apps. So that's I think quite standard. What's interesting is subscriptions are not quite there yet. Maybe that's a perceived value thing. We have to think about how do we capture that. If for example you're sitting at a dealership or something similar, could a dealership be the forecourt of the future? Could I be charging my car at the dealership while I'm on a call online dealing with certain issues, and in so doing you can upsell me various other things while I'm there. So I think quite key to open our minds to what do some of these insights mean and how do we position ourselves as business people to take advantage. Other one is, of course, range anxiety that persists despite, and if you look at some various websites, Grid Cars and others, you'll see tremendous amount of charging infrastructure in the various metros between those cities, N1, N3. Lots of charging infrastructure is in place, but people don't know that, educated on that, and as a result, they're quite anxious. As you can see, more than 62% of people want 400 plus kilometers of range from the electric vehicles, whether urban or suburban. It's quite clear that they do have quite a bit of nervousness around that. Yes, batteries are becoming more efficient in the way they deliver power, the way that they recuperate power, and therefore in how long the range is. Of course, if you press it, put it in sport, you do consume more, so people are demanding that. And as we shift towards gradually EVs over a prolonged period of time, we have to be able to bring in models that do have that battery life, but do consider that key element around affordability as well. The other one is the battery recycling ecosystem. Quite key, quite important to think about. As a buyer of an electric vehicle, eventually this battery will no longer be of use to me. What happens if I keep my car for 10, 15 years, right? Do I need to replace the battery? Who's going to be accountable for it? The collection, the recycling, the storing, and so forth. Interestingly enough, you must think about, does this create a new business opportunity that we haven't thought about, a new business model for the future? If, could we establish a business that's bespoke for that, or should that lie rather with, say, a dealership? Could you have a business model where you have sort of an exchange program for these various batteries? Could you have, as a result, the capability to sort of vertically integrate and begin to see how you can import batteries and then eventually manufacture batteries, then eventually, mining and so forth? We know that the white paper from the DTIC tries to look at some sort of vertical integration from a mining perspective, not only in South Africa, but to the various countries like the DRC that have got some of those minerals. So it's an interesting proposition around how do we position businesses to be able to capture that. As you can see, consumers don't expect necessarily, an OEM to be accountable for, the battery collection, storing, and recycling, but they are looking at someone to try and solve that problem. In terms of local perspective, it's a bit of a shift away from the consumer. If we think about what's happened in the recent past, the white paper was released, and I think it is towards the latter part of last year, early this year, I think latter part of last year, and it had a few interesting things. One, I think it was a bit silent on how do we drive and stimulate demand for consumers like you and I from an EV perspective. It didn't have necessarily tax breaks or tariff incentives, which means the cost of an electric vehicle that's imported is still going to be quite high. Local OEMs, some have announced intentions to manufacture some sort of either plug-in hybrid electric vehicle capability, but not necessarily a full-on electric vehicle. We know that, for example, Eastern Cape Mercedes, the C-Class, is already some sort of a hybrid already. So that needs to be solved. The demand side of it wasn't quite solved in the white paper. I think there's an opportunity to see if there's a way to revise that so we can drive customer demand. On the supply side, there were some incentives put in place, but they were not significant. And it's important that if you think about the supply side of any sort of industry, never mind manufacturing or component manufacturing industry, you have to have quite good initial incentives to encourage investment to build those capabilities, to build them at scale, so that eventually those economies of scale can follow through to the cost of those parts, so they can be cost parity with various imported parts. So we can build some of that capability. What does that mean? It means that even though we do have some capability already, even though we do export some components, by the way, that are for electric vehicles, in some instances to the likes of Porsche, like some of the components that go into the battery, there are still some challenges with how do we make sure that we build up fast enough, especially considering that other countries that compete with us are fast moving in that direction, the likes of Thailand and Morocco, Mexico, and so forth. I saw Canada as well will be building batteries in the near future. How do we make sure that we're able to quickly pivot and be able to build that industry so that we can support the local manufacturing industry to be able to export some of those vehicles, and also bring down the price for the likes of a you and I to buy an electric vehicle here and to service it and to get the various components that we might need in the near term. So what does the future look like? What do people look like in terms of their intentions? Like, do they want to buy or not? Do they want to switch brands or not? How do they want to finance? If we think about new versus used preference, it's quite interesting. People who have bought new want to buy new again. It's like 80-odd% are keen to buy a new car again, those that have bought new. And those that have bought used vehicles, a little bit close to half and half, 46%, 40% odd, are keen to buy used again. That tells you that people have aspirations to move from a used car to a new car, but there's an affordability challenge. There's what people want and what they can practically do that's getting in the way. In the interim, while we're waiting for the economy to shift, while we're waiting for the Reserve Bank to cut interest rates, what do we do for users who are looking to buy used vehicles, and what do we do to help them shift to new vehicles? How do we make sure that that market is catered for and is captured in the meantime, and how creative can we be about, well, now that the economy is better, you can trade in your used vehicle, and here's a funding model that allows you all of that flexibility. In terms of switching brands, 74% of consumers, based on the study, are keen to switch brands in their next vehicle purchase. If you're a big brand and you have a lot of consumers, that's a bit scary, but it's a challenge. How do you retain the current customers you have? How do you build loyalty within them? How do you make sure that they buy your brand again? And if you're up and coming, we saw some of the graphs that Suzuki Swift in some recent conversations, or Suzuki in general, has dramatically come up in the market. I think something like third highest sales in the market over recent years. That's quite important because it shows you customers are starting to question value. What is it that they actually want when they buy vehicles, and how do we make sure that we give them those things? So people are willing to switch for various reasons, just try something new. They want certain technologies and products in it. You'll be surprised when you drive these newer cars, the smaller ones. They have everything in them: reversing cameras, lane assists, cruise control, Android Auto, Apple CarPlay, and so forth. So it's important that we're able to make sure that as you position the kind of stock that you have, you're also able to sell that onto members or onto consumers. Interestingly enough, I didn't include it here, but people are not so keen to subscribe to the various add-ons as much. People are not keen to subscribe and pay a bit more on the normal purchase price of a car to have Android Auto and. In South Africa, they seem to want it as part of the car, and there's a bit of pushback on those approaches. In terms of financing options, I think this is interesting for the F&I colleagues. People prefer to have short durations, right? 24 months or less, 36 months, 48 months, and so forth. But is that in sync with the realities that we're seeing in the market? What people prefer and what they can afford are not necessarily the same things. We've seen people going 60 months, 72 months, balloon payments, all sorts of things to have the car they aspire to have, helping able to service the loan on a monthly basis. You can also see that the split between lease and loan is actually quite comparable and quite close. To think carefully about those leasing options, or in some other models, let's call it a subscription option for a vehicle. How do we enable customers to be able to have that kind of flexibility? The next one is about what they don't like about financing. This is important for you guys. Importantly, waiting for approval, right? And the lack of transparency in the process, lack of understanding within the process. What are all these terms and conditions? What do all these things mean? What am I actually signing for? And as well as completing copious amounts of paperwork. We have to be able to find ways to digitize that to improve the customer experience. We know that we had grey listing issues. We have quite stringent requirements from FIC. But even with all of that in place, you have to be able to enhance the customer experience. And that can quite importantly determine, will the customer repeat and buy from there, right? How do we integrate with the various banking systems to make that process quicker and more efficient? To have an almost upfront, you will definitely not qualify, sorry, or you'll probably have a good likelihood of qualifying, or have an answer for you within, say, 12 hours. Yeah? How do we improve that gradually over time? The other one is the additional service that they want when they purchase a vehicle. What do people buy or want to buy as they buy their vehicle? Interestingly enough, vehicle insurance comes out quite high, which is interesting because we know that majority of cars in South Africa are not insured. But for those people who are formerly buying cars, you can see that that's quite a big focus for them. We have to ask ourselves the question, in a market that's tight, that's saturated, with businesses are under pressure, will we see dealerships starting to, and OEM starting to offer insurance products as part of purchasing the vehicle? In the mind of a consumer, it could mean, well, if I bought it from the OEM or from my dealership, they know more about the car than my insurer, I'll get better service. The likes of a Porsche encourage you to bring the car back to a Porsche specifically for panel beating. These are some of the shifts that we're seeing in approaches from various entities about being able to grab a bigger share of essentially the customer's pocket. In terms of shared mobilities, are South Africans still willing to commit to owning a car? Do they really want to own cars, or is that changing? What we can see is a large proportion, nearly 2/3 of consumers are questioning the need to own a car in the future. based on the ability to have access to some sort of shared transportation modes. That's important because it means, is there a shift? Will demand sort of decline as people share some sort of modes of transport? If that's the case, how do we pivot to enable that? The likes of Uber and so forth, those operators, ride-hailing operators, how do we enable them to be able to buy one car or a fleet of vehicles? What financing options do we put in place? How do we reduce the barriers to entry and the burden for them to be able to access some sort of financing and vehicle subscription lease type of options and model for them to be able to sort of access these cars and provide that to consumers. And it's important for us to understand those shifts. South Africa is, if you look at the next slide, it's quite a big country, all right? So not as small as some of the European countries, and our cities are quite wide. Johannesburg is extremely wide. So that means our transportation systems like trains and so forth might not be able to fully cater for some of the needs of people. So vehicles are probably going to be where they'll look at, and we're looking at mobility as a service. That's what that mass means. You can see that a large proportion, particularly younger people, the youth, are quite interested in mobility as a service as their primary transport. Have to be able to accommodate them in the way that we work and in the things that we do. Coming top from sort of shared transport modes is obviously ride hailing. That's your Ubers and so forth. There's local transport, but a very fascinating one is car sharing. I mean, if you look at some places like China and so forth, that you can literally drive a car, leave it somewhere, someone else takes that car, drives it and so forth. So actually sharing a car. That works in a city that's tight. Can it work in a large city like ours? Is there a business model, an operating model, a funding model that we need to think about for car sharing? The other one is owning versus leasing versus some sort of subscription model. If it's preferred for future customers, I think it's important for us to think about how do we accommodate that instead of discouraging it. If that's what people want, we have to meet customers where they are. We have to be customer-centric and not product-centric, as I think some businesses have been in the past. How do we build trust between us and them? How do you, as a business that's going to do subscription model, help to make sure that the costs are good, there's availability of those cars, the waiting time is low, and that we are able to enable the customer to access these things. In terms of affordability, quite interesting. I spoke about it in a previous slide, but this I think is a different slant. Whether it's going to be an electric vehicle and whether it's financed through outright purchase or leasing or some sort of subscription model, generally, most consumers expect to pay 6,000 Rand odd or less. You have to be able to find ways to enable that. Does it mean a cheaper car or a more cost-effective car? Does it mean a different financing option? Does it mean people are able to switch cars every 3-4 years and still pay roughly that 6,000 Rand odd, obviously including inflation over time? How do we enable the consumer to be able to have access to those types of things? So towards the end, and I think in closing, the key findings: one, macro factors such as policy uncertainty, such as load shedding, or clogged rail infrastructure, ports infrastructure, will continue to sort of hamper the economy from growing at the rate at which it could grow. But that, as we still think the economy is still going to grow, albeit not as much, 1% perhaps GDP growth. If we can ease that over the next couple of years, where we should see the sector breathing again, and essentially the market and the economy growing again, so that people are able to buy vehicles. Two, we think the local vehicle market will remain constrained in terms of, in particular, new car sales. I think it'll remain flat for the balance of the year, towards maybe the latter part of the year or early 2025. With interest rates cuts, slowly seeing people begin to buy new cars. That means in the interim, pre-owned vehicles are going to remain quite strong. We saw the affordability challenges. We saw that people are willing to switch brands. We have to keep that in mind as people are looking or shopping around for pre-owned vehicles. I was in a conference where they said people are willing to shop online for their cars in terms of browsing, but eventually they come physically to the dealership to get the experience. Have to make that experience good, the ability to buy good, the ability to get access to financing quite efficient and good. Of course, also have to make sure that the access to these pre-owned vehicles is good. I think it was a challenge, and I think will remain a bit of a challenge in terms of stock availability for those vehicles. We have to find ways to make sure we stock the right types of cars for those people. There's been a big shift away from sedans and so forth and more towards crossovers and SUVs based on the roads, potholes, and just general lifestyle. Modern SUVs drive extremely well, very similar to a sedan, some even similar to a sports sedan. So how do we make sure that we have the right kinds of stock, especially in the pre-owned or used car vehicles? Electric vehicle demand will remain a little bit stifled. Of course, those who can afford, we have charging infrastructure at home, will continue to sort of go for it. But for the rest of us, I think it's going to continue to be a bit of a challenge until we're able to break all of those barriers we spoke about, such as the charging or range anxiety, such as, the price point for those vehicles. Mobility as a service, it's a future that we can't ignore. Young people, example, my twin sister sold her car 3 years ago and hasn't seen a need for it since. Happy to use ride hailing, etc., bum a ride from me or from my other siblings. But if it's going to become a thing of the future, how do we make sure that we remain sustainable, we're able to have funding models for that, and are able to succeed? I think in closing, given the challenging macro, and to some extent micro environment that we have, how do we as individual businesses change our business models to suit the environment we're in? South Africa is known for surviving tough conditions, tough market conditions, dealing with a lot of potential conflicts, dealing with challenges, and we're able to come out on top. That's why our business leaders do well on a global level. So how do we as businesses pivot, and as a collective, because RMI is about collectively banding together across the retail and aftermarket, how do we as a collective work together to be able to enable the broader economy, to be able to enable the sector, to be able to work towards influencing policy, writing policy, assisting government with policy, as opposed to just sitting back and being able to address some of the macro challenges in the ways that we can. Thank you so much, and I think I'll hand back to Ryan. Cheers.